Get further perspective from Chief Market Economist at Spartan Capital. Peter Cardillo is with us this evening as well. Great to have you back with us on India Tonight, Peter. Peter, are you going with a 75 basis point rate hike by the Fed this time with perhaps a less hawkish commentary? Or do you think inflation could have peaked and a pullback on aggressive rate hikes could happen sooner than expected?
I think we're going to see a 75 basis point hike tomorrow. And I don't think we'll get any evidence of the Fed wanting to pull back just yet. But I do see that happening in December, because I think the Fed will raise only by a half of a percentage point and probably announce a pause going into the new year. I think tomorrow's communique will be pretty much the same as we saw the last time, hawkish talk. I don't think the Fed needs right now to lessen its aggressive stand, because that would probably weaken the credibility of the Fed, which, as we all know, has been critically diminished over the past 6 to 8 months. So. Right. I think they were coming to a pause, but I don't think we'll see indication of that tomorrow.
Not just yet, Peter, but then perhaps do tell us, besides inflation, what are going to be the top concerns that the Fed will tackle before it arrives at a decision tomorrow?
Well, look, the inflation numbers have been high, but I think I've said this on your program several times already. If you look at the year-to-year increases in inflation over the past 3 to 4 months, in most of the indices, and including the PCE, which is the index the Fed likes to follow the most, we've seen numbers actually come down. So with oil prices basically stabilizing at present levels, with the flow of more commodities entering the marketplace, we've seen a drop, not a significant drop, but we've seen a drop in prices moving higher, and I'm referring to agricultural products. I think those prices have already been absorbed in the marketplace, and certainly in the economy. So I think, unless there is a unforeseen problem immigrating from the war, then I think, we've seen the worst of inflation. And the Fed knows that. And the Fed needs not to overdo by raising interest rates, because if they do,
yes,
a mild recession could turn into a severe recession.
Yes, indeed. And there is a concern that perhaps these aggressive rate hikes could lead to a lot of overheating within the economy. And that would be a concern not just for the Fed, but for central banks across the world. Meanwhile, Peter, the U.S. dollar has weakened as we get more optimistic ahead of the Fed and the Bank of England's decisions. What do you see for the U.S. dollar in the near term?
I see let's talk about the dollar index, because that'll give us a general consensus of the dollar. I see the dollar index basically hovering around present levels, and probably making one last stab to new record highs sometime in early 2003. So I don't see much improvement for the yen, for the euro. In fact, we had the index today open up lower, and now it's reversed its way up. And that was due to the fact that we saw the yen strengthen overnight. But again, the difference in the spread between Japanese interest rates and U.S. interest rates is enormous. And so there's really no room for the yen to really appreciate in the near term.
And Peter, how do you see the next interest rate decision by the Fed impact prices of gold from this point on? Do you see a direct correlation that could actually take place, at least this time around?
Look, I'm a great believer in gold, and I believe every portfolio should have a certain amount of gold as a hedge to protect themselves. Unfortunately, gold has not outperformed the way we expected it to perform, and that's due to the fact that we had zero rates. Now we're near 4%, and by the end of the year, we'll be closer to maybe 4.5%. So the strong dollar and interest rates have capped the price of gold, and it's basically put it into a trading range of about maybe 1.5 to 2% from the low point of about 1625 to about 1700. So I think smart money continues to buy gold, but in the near term, we should continue to see a dull performance. I guess what you're really asking me is, what will happen tomorrow when the Fed raises 75 basis points?
Yes.
Not much, because gold is already discounted that.
And what about the equity markets, Peter? That's something that we're watching very closely. The Asian markets, the European markets have been pretty sanguine before the decision is made. Do you expect that kind of resilience to continue? Has most of the action been factored in by the equity markets?
Yes, I do. I think the markets have discounted a Fed hike tomorrow and another one in December.
Fair enough, Peter. That's where we're leaving it. Thanks very much. And of course, we will analyze the Fed rate action as it happens tomorrow. But Peter Cardillo, always a pleasure getting your views. Thanks very much for joining us on India Tonight.